Hello and welcome to this week's edition of Your Wealth Matters, brought to you by the team of Your Wealth Advisors. I'm your host, Kristen Oakley, and joining me in the studio, we have Ryan Cunningham. He is the founder, and Paige Cunningham, co-founder. We are so glad that you're joining us today. The title of this episode is Taxation in Retirement. Are you ready for it? The reality is that so many people are unaware that their tax bill might not just not go away, but also go up in retirement. But the good news is there are some strategies that you can begin to implement to help you reduce that potential tax bill throughout the rest of your life. And that's what we're going to be sharing with you today. So Ryan, Paige, excited to be here with you. How are you?
So excited. Thank you. Good to see you.
Good to see you as well. And we were joking before the show, the title of the show, right? What does it make us all think of?
Oh, T Swift.
Oh, yeah.
Our
are you ready for it?
Our kids love some Taylor Swift in our household.
We do.
I'm sure you can't hear that title and not hear that beat drop,
Exactly
right?
what I thought of when I saw it.
Yes.
Yeah.
Well, we want you to be prepared for your taxation in retirement. And it's interesting, as we set up today's show, it's really important to distinguish the difference between tax preparation, which most folks are familiar with, and engaging in strategic tax planning. So let's start there, because this is something that really does set you all and the team of Your Wealth Advisors apart. So can you explain a little bit about the difference between those two things?
Yeah, that's a great way to start on this, because there is coming into tax season or coming out of tax season is tax prep. It's really what your accountant or your CPA is looking at, and it's looking backwards.
Yes.
Right? Whereas tax planning, we're wanting to look ahead and help plan for what is to come. And there's a big difference between the two, especially in retirement. And so we want to make sure that in the event that you haven't done it before, that you're not getting confused of getting out and figuring out how much you owe for last year.
Right.
We want to make sure that you are prepared for what it looks like this year coming up or in future years as you are in that transition into your glory years, as they call it, of retirement.
Yeah. For sure. You know, it's interesting. One of the analogies that has really resonated with me is that if you think about tax preparation, it's an archaeologist, right? Because they're looking back, your CPA is looking at what happened last year, trying to figure out how you can save on what has already happened. But you all are architects. You're looking ahead to the future. You're building a strategic tax plan to say, okay, how can we lower this whole thing throughout the rest of your life? And that's a key distinction. So I'm really glad that we're having this conversation today. Why do you feel like it's so important for folks to really engage in this proactive tax planning process as soon as possible?
Yeah, I mean, I think without, having a strategy in place, what often happens is, just think 25% alone, right? So for every dollar you make, 25% of that is going to the government. And if there are plans that can be put into place to make sure that you're able to keep more of your hardworking money, we would absolutely love to help with that. And there are ways to do it. I think another big thing to do with that is, you can reduce the risk, or I guess the pressure on your portfolio that it's having to keep up to maintain your current lifestyle, right? And in order to do that, then you can reduce your risk in your portfolio, which is huge in retirement, right? Because again, you're not contributing still. So to make that money last is what we need to do. And if you're, you don't have strategies in place to help reduce your taxes, then a big chunk of that is actually not your money.
Right. And that's a huge wake-up call for folks to realize that, guess what, all the money you've saved up in a traditional 401k, traditional IRA, things of that nature, hate to break it to you, it's not all yours, right? You have that silent partner, Uncle Sam, who becomes not so silent in retirement.
That's ordinary income.
I think that's the biggest key, is that it comes out as ordinary income.
Right.
Yes.
And a lot of people don't realize not only that it comes out as ordinary income, but what all that can play into in retirement.
For sure. Well, it's important for folks to understand how each dollar you own is going to be taxed. And most people enter retirement with three buckets, if you will, of money, and they're all taxed differently. So let's talk about that. So first up, we have taxable accounts. What do those include?
Yeah, this is money that you've already paid taxes on. Think of it as your payroll money or your spending money, right? It's going to be your checking account, your savings account, money that has already been taxed on. Now, you can put it in the market and have it in a brokerage account, and you're still going to owe taxes on the growth or the interest. But this is what I like to explain to a lot of our clients is your right pocket money. This is the money you're going to pull out when you go to the grocery store, right?
Yep.
It's not the money that's in your left pocket that you're using at a later date because you haven't paid taxes on it. And it really is important that you know the difference, right?
Yep.
Because if you have, I'll give you an example of a client that we had that came in last year that she has been working with her same advisor for 20 years and loved her advisor, but they were pulling money out of the wrong account.
Right.
And she had money in a taxable account, her IRA, along with that, and they were pulling money out of the IRA as opposed to pulling money out of already taxed accounts.
Which means they were paying even more in taxes than they
Even more.
necessarily needed to.
Even more.
Yeah.
Yes,
And so
right.
just having that tax plan, right, as opposed to just looking back, you want to have a plan in place that allows you to know, well, what bucket do I need to pull from?
Yes.
Yeah.
Yeah. No, that makes so much sense. So we've talked about the taxable account bucket. You touched on this, but now we got to talk about the big bucket that the majority of Americans have the bulk of their wealth stored up in, which are those tax deferred accounts, also known as qualified accounts. I mean, it's no wonder it gets confusing, right? But
Yeah.
let's talk about that bucket because that's
Well, and not
a big
only
piece.
is it qualified accounts, there's multiple different names for it. 401ks,
Yep.
403bs, 457 plans, deferred comp plans, and you just don't know,
Yep.
right? But the reality is you're given a great, and we are all given a great opportunity to invest this money on a tax deferred basis. It's just understanding, well, what happens when that deferral is over?
Right.
When we have to start using it, whether we're using it in retirement as an income source or we're using it because the government's telling us we have to take that money out of it.
Yeah.
And that's where it's so confusing and where diversification comes into play because so many things can help to where when you do have to take that RMD, you can still put it back in another account, instead of just having to, a lot of people think they have to just spend the money and they don't.
Right. Yes. Yep.
But if you want to spend it, hey, we'll help you
Right.
and show you what you need to do to enjoy
Your
that retirement.
Yes, no, for sure. And I'm glad, well, two things I want to say real quick. I always think of qualified accounts, the way I remember it is that means it's qualified to pay tax on it, right? You've not paid tax on
Right.
that money yet. But you brought up the word diversification, Paige, and I think it's so crucial for folks to understand. I think typically when folks hear diversification, they just think of, oh, I have stocks, bonds, I have a mix
Yes.
of mutual funds, whatever the case might be. That's kind of how it
Right.
typically gets used. But what you're speaking to is tax diversification.
Yes.
And a lot of people don't understand that that's equally as important.
It
right?
is, yeah, absolutely. I think it is so important that you have qualified accounts and then you also have unqualified accounts, which are more the Roth, right? The
Yep.
Roth 401k, that's a great option. If you're eligible for that, that can be very helpful.
Yep.
Also, life insurance. People don't think about this. Life insurance is not taxed when it comes in. It goes straight to your beneficiary. That's huge, especially if you have your children are older and they're in their higher income earnings.
Yep.
That could be a big help instead of just inheriting, the qualified funds.
Right. So that's our third bucket is the tax-free bucket. That's our favorite,
yeah,
right?
It is. Yeah.
Yes. Well, I know we're going to talk about later on in the show how folks can strategically work with you all to move money from being taxed always to taxed never again. That's a beautiful thing, right?
Absolutely.
Well, what would you say to someone who's watching right now and going, okay, I guess I have more of a tax problem than I realized I might have in retirement? What would your encouragement be to them?
Yeah, we have a fantastic tool that we can go on and take a quiz to find out what is your tax liability? What does it look like for you? And we would love that opportunity to have you do that quiz or call us and set a time to come in and meet with one of our advisors and go through your tax plan. We're not going to give you what you're going to owe. We're going to help you figure out what accounts you need to take for to have a successful and to minimize that taxable event in your retirement. So give us a call and let us put together that tax plan for you. We'd love the opportunity.
Yeah, it's a complimentary consultation that we offer, so you are more than welcome to come in. Worst case, we give you the plan and you take it and do what you want with us. There's no obligation to work with us. We just love to help anybody we can help, and then it's up to you to decide if we're the ones to help you.
Wonderful. I'm excited you brought up the quiz. I know we'll dive back into that when we come back as well. So Ryan, Paige, thank you so much. But if this is resonating with you, or if you're already working with another financial advisor and they are not having these kinds of conversations with you, you owe it to yourself to get a second opinion. And the team of Your Wealth Advisors would love to be able to provide that for you in the form of your very own complimentary written financial plan. To schedule yours, simply call 844-411-3050. Or if you'd rather connect online, just grab your smartphone, go ahead and scan that QR code in the bottom right-hand corner of your screen, and that will get you connected as well. Stay with us. We've got a lot more to cover on today's show regarding taxation and retirement. Are you ready for it? Right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Your Wealth Matters. I'm Kristen Oakley here with Ryan and Paige Cunningham from Your Wealth Advisors, and we are so glad that you're hanging out with us today. If you're just tuning in, the title of today's show is Taxation in Retirement. Are you ready for it? And here's the challenge. So many folks think that their tax bill is going to go down in retirement. We'll get into some misconceptions about that as we continue this conversation. But a lot of folks are realizing maybe it's going to stay the same, but in a lot of cases, it's going up. So what steps can you take right now to begin reducing that tax burden? Well, we have a very awesome resource that Ryan mentioned before the break. We want to make sure you take advantage of this. It's completely free for you to use. You can access this tool by going to ywtaxes.com or by scanning that QR code, and it'll ask you for some basic information, no strings attached, and it'll show you what your potential tax bill might be over the rest of your life if you settle for the government's tax plan for you. But here's the good news, you don't have to settle for that. There is a better way, and that report will help show you the difference between the government's tax plan versus how much less you could pay in tax if you enact some of these tax saving strategies we're going to be sharing with you on today's show. So I'm really glad we're sharing this tool. I know that previously this was only available to existing clients of Your Wealth Advisors, but you guys are so passionate about getting this information out. You want to help as many people as possible, right?
Yeah, we do, absolutely. That is, our firm is strictly based on just helping people and, you know, giving them the knowledge. Yes. And if that's all we do, we're okay with that. Of course, we would absolutely love to have you as a client, but if we're not a good fit, at least we've given you information and been able to help you in some way. So.
Absolutely. Well, we're going to get into some tools for tax control, if you will. But before we do, explain where we are as a country and as a nation in our history and why this is such a timely and time-sensitive conversation that folks want to take action on as well.
Yeah, taxes are a fun and always evolving conversation. And I think that's the most important aspect when doing a tax plan is knowing that taxes are going to change.
Yes.
Right? And they change based upon whoever is in office and whatever the administration is. But the good news is we're at historically low tax rates today. We have been, this is the third lowest tax rate we've seen in the history.
Which is mind-blowing when you think about it, because people are like, I feel like I'm taxed to death on everything.
Oh, but can you imagine the 80s, like when interest rates were just everything? And
no. The tax rates used to be significantly higher, believe it or not. So it's a little scary when you think about it. But yes, we are in the third lowest brackets we've ever been in.
Yeah, and a lot of clients and a lot of prospects come into the office and they say their number one fear is taxes are eating me up, or I can't retire because taxes are going to take away what I've worked for. And while that is a valid concern and a valid thought, if you have the opportunity to put together a plan, then I think that there are options available to take advantage of where we are in today's tax codes, take advantage of the low tax rates that are out there. And there's a lot of tools that are available to do that.
For sure. Well, again, we already mentioned that the majority of Americans have the bulk of their wealth saved up in these tax-deferred accounts. Again, traditional 401ks, traditional 403bs, traditional IRAs, maybe you have a 457, TSP, things of those nature. And what's really frustrating is when these accounts were created, we were told that this was a really good thing for us, right? Because you're going to put the money in, and the year you make the contribution, you're going to get a tax break. And then supposedly, once you retire, you should be in a lower tax bracket.
Right.
But is that really what's going on?
Unfortunately, it doesn't necessarily mean that just because you retire, you're going to go into a lower tax bracket.
Yeah.
Right.
And so, while taxes are low, they are most likely on the rise over the next 10 years. And you want to make sure that you have a plan in place to ensure that you're getting that lowest tax bracket that is available to you. Because the worst thing you could do is go into retirement and think that I'm going to save all this money because I'm not going to owe as much. But then every dollar that you're taking out to live off of on top of your Social Security is coming out of one of these great qualified plans, and it's taxed at ordinary income taxes.
Yes. Yep.
Oh, yeah.
Well, and this is crucial too. Let's say someone has a large purchase that they need to make, and they've got these 3 different buckets of money, helping them know which bucket to pull from in the right order so that you can create greater tax efficiency throughout your full financial plan. And this is what you help folks do, because what are some of the negative consequences of not paying attention to that and not having the right withdrawal strategy in place? What else can be triggered?
Well, a lot of things. I mean, the number one thing that I think people are concerned about in retirement over 65 is, what about Medicare?
Right.
What about your IRMA, your Medicare Part B premium? And if you take too much money out for that large purchase, or for a vacation or windows in your home, a roof, whatever it is, then the government's going to do what they always do, and they're going to send you a little notice that says you're going to owe more on your Part B premium.
Yeah.
And they come into the office and they're like, well, how do I get out of this? How do I avoid this?
Right.
And it's all about, unfortunately, you can't undo it.
Right.
You got to live through it. That's why we stress the importance of education.
Yes.
Knowing what you have is your responsibility. How it works, unfortunately, is very difficult for a lot of people to understand, but it is your responsibility to know how your money works and what are the tax implications of taking that money.
Right.
We had a great client. She's one of my favorite clients of all times. And when we first met her, she did this exact same thing. She had put a new addition on her deck for retirement to enjoy the pool with her grandkids, and she was so excited about it.
Right.
But she pulled it from the wrong account.
Yeah.
And unfortunately, it caused a couple of things. One, she owed a lot of taxes on it.
Right.
2, the next year her Part B premium was higher. And then 3, which was the ultimate piece, was she's looking at her longevity and saying, well, did I mess up on how I should have taken or where I should have taken this money for future years down the road? And so we stress that importance of making sure that when you have multiple buckets, and we hope that you do, that you pull it from the correct bucket for whatever that expense may be.
Right. Well, and here's the really sneaky thing about something like IRMA. It's a 2-year look back.
Right.
Oh, yeah.
Meaning they're going to look at what you did 2 years prior and how much income you had to determine how much you're going to pay in Medicare. So a lot of folks don't even realize maybe age 63, they make a decision. And then when they hit Medicare age, now they're paying even more than they would have had to. So I'm really glad that you proactively sit down with folks and help them build a plan to make it more tax efficient.
Right.
But I think another thing we want to highlight is you offer this consultation, you offer this resource of ywtaxes.com and a complimentary written financial plan completely free of charge. Why is that?
Again, our goal is to help our community. Our community is everything to us. If you come in and all we do is give you a complimentary consultation or a complimentary plan to take with you, that's okay with us. We are totally fine with that. At least we gave you more information than what you came in with, and you can take it and decide what's best for you. However, we would always love to work with you, but we're not a match for everybody, and you're not a match for us all the time, and that's okay. But at least you've left with more knowledge than what you came in.
I love
and
that.
And that's what's so important to us.
Yes, well, and the only way you're going to know if you can help someone or not is by sitting down with them and looking at their situation.
Absolutely.
Otherwise, you don't know, right?
Oh, yeah. Everyone's situation is different. So.
Yeah. We tell people that, it doesn't matter if you want to work with us, or you don't want to work with us and you just need a plan.
Right.
We will give you that free complimentary consultation and that free written plan. And I tell people all the time, the importance of a plan is so that you can look back on it when life happens and remind yourself why you've done what you've done.
Yes.
Because at the end of the day, life is going to happen to all of us.
Right.
Yep.
And we want to make sure that we have the ability to help as many people as we can and get our name out there. Look, we're very involved in our community. We got 5 kids that are very active in the community, and we want to do our part to share the knowledge that we have learned and gained over the 20 years that I've been doing this.
I love that so much. Well, Ryan, Paige, thank you. And thank you again for being here with us. If this is resonating with you, if you want help putting together a written financial plan for yourself, again, we're focusing today's conversation a lot on the taxation piece. That's just one of many pillars that goes into building a comprehensive, holistic financial plan for your retirement. We encourage you to reach out to Ryan and Paige and the team of Your Wealth Advisors to schedule your time today. To do so, you can call 844-411-3050. Or again, you're welcome to scan that QR code and that will get you connected as well. Stay with us. When we come back, we're going to dive into some of the solutions for this tax problem in your retirement. Stay with us.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Your Wealth Matters. I'm Kristen Oakley here with Ryan and Paige Cunningham, and we are so glad that you're spending this time with us today. Today's conversation has focused heavily on taxation in retirement, and we've been posing the question, are you ready for it? We want to make sure that you utilize this awesome resource we have for you that in a matter of minutes can literally show you what your potential tax bill might look like over the rest of your life, but also compare and show you how much less you could pay in tax if you enact some tax saving strategies, which is what we're going to be focusing on now in our conversation. So we invite you to visit ywtaxes.com. You can get there by going to that site or by scanning that QR code. And really, it's mind-blowing. I know that once folks see those numbers, they can't unsee them.
Yeah.
And they are coming to you guys and going, okay, help.
Yeah.
I know
Panic.
I need help with this,
Yes.
right? So what is the solution? What can folks do to help take steps to mitigate that tax bill?
Yeah, there's a great opportunity that is very, very, very popular right now in conversions, Roth conversions, and taking some of that money and going ahead and paying taxes on it so that in retirement you get it tax-free and you get the benefits of that. And so we want to make sure that in the event that that's something that they are looking for, that they know what are the positives and what are the negatives of doing a conversion.
Right, because it's not, again, a one-size-fits-all strategy.
No, absolutely
And you
not.
typically don't, it's not advised to convert the whole thing at once, because talk about the tax bill that would
Oh, yeah. Well, it's
generate,
ordinary
right?
income, right? As
Yes.
it comes in. Yeah. But with taxes being at the third, historical lowest level ever, perhaps that does work for some people, right? Let's go ahead and convert it over to a Roth conversion. You do it in pieces, obviously, so that your ordinary income is just not astronomical.
Right.
But yeah, I mean, I think it's a great option for a lot of people.
For sure.
Absolutely.
Well, and I think the hard part is psychologically, it's never fun to write a check to the IRS,
Oh, I know.
right? It's not fun to
Yeah.
go ahead and pay in taxes, but you mentioned this earlier, the time sensitivity of this, because we are in the third lowest tax brackets of the history of our country, it might make sense to go ahead and pay a little bit of tax now.
Right.
So that you don't have to pay it later. Because guess what? That money is going to continue to grow too.
That's right.
And so it's
Yeah.
going to generate an even bigger tax bill later
Exactly,
on.
yes.
I think that's what a lot of people miss is they think
Right.
that by making the contribution or the conversion over that the money is coming out of whatever the investment is or whatever the market is and that they're not going to be able to make up for the taxes that they owed. So it is an important aspect of understanding how it works.
Yes.
And what we want to do at Your Wealth Advisors is educate you, let you know, here's your options. As you said earlier, it's not a one size fits all.
Right.
Right? Everybody's got a different situation, and we want to make sure through a comprehensive analysis of whatever it is that you have, that it makes sense for you. Because the worst thing you can do, as you said, is just do it all at one time.
Yeah.
Right? While it's easy, you rip that Band-Aid off, it could cause other problems, as we've talked about with Irma, or other problems as we've talked about with higher taxes. And you got to
Yes.
think about time and
Yep.
all of those values and all of those factors that don't really just pop off right at the beginning,
Yeah.
right? And so part of what we do at Your Wealth Advisors is making sure that you know what is best for you and then what options are available to do that. And we would love the opportunity to give you a free complimentary consultation with a free written plan and a tax plan to show you here's what it looks like in the event that you want to do this.
No, awesome. And I know that that site that we're putting out here for viewers, this is really just the first step, is raising that awareness. The real way the team is going to be able to help you is by you coming in and sitting down, looking at your unique individual situation and having them build a strategic tax plan specifically for you. There's some other options. I know you mentioned life insurance earlier. Talk about that, because a lot of folks don't realize the tax advantage benefits.
Yes, absolutely. Life insurance is a wonderful thing simply because it's a beneficiary. You put a beneficiary on there, and that passes tax-free, right? So that helps eliminate any, estate tax. And then also, I loosely mentioned earlier, but a lot of times when parents are passing away and it's being passed down to the next generation, those children are at their highest earning income levels. So if they were to inherit any qualified money of any sort, now you could be pushing them into a higher tax bracket, and everyone's money is worth less, right? Because they're paying more.
Well, and again, a lot of people aren't aware of the recent change that came with the Secure Act 2.0, where now non-spouse beneficiaries, when they inherit that money, they only have 10 years to get it out. So talk about a huge tax bill. Well, anyway, we could go on and on. There's so much to get into, but as we wrap up today's show, what do you want to leave our viewers with this week?
Give us a call for a free complimentary consultation, whether it's an education or it's putting together a plan for you. We want to meet you and we want to help in any way that we can by putting together a plan for you for retirement.
Wonderful. Ryan and Paige, thank you so much. And thank you for joining us today. That number to call to schedule your time with Your Wealth Advisors is there for you on the bottom of your screen, 844-411-3050. Be blessed. Thanks for watching, and we'll see you next time here on Your Wealth Matters.